All right.
Hey, Steve.
Hello. Hello, Jamie.
Hello, hello, hello. Am
I
I
see
coming through
you.
loud and clear?
Oh, I see Albert. I hear you.
You see Albert, but you hear me. All
That's
right.
right. So we're good. That's what we want.
Yeah, that means things are working properly. All right. Hi, everybody. Thanks for popping in for another Monday edition of Office Hours with myself and Steve. Before we get rolling here, just want to do a little bit of the legalese and make the lawyer people happy. For those of you who attend regular, you already know this, but for the new people, as well as I guess we have to do it every time anyway, so here goes. We publish information. That's what we do. We give you the good information that you want to see. So we are a publisher of said information. So everything we share with you here today is strictly for educational purposes. So if you do need the help of a registered investment advisor or a licensed Series 7 broker, go to the great Google machine and type that in, and you will be flooded with thousands of hits that will serve you. Okay, moving right along. Hope everybody came back rested from a nice weekend. Today was a pretty tradable day, nice and easy. If you can use that description to describe a market day, today was definitely one of those days. Before we get into the meat of the presentation, though, just want to make sure that everybody's aware of all of the webinars that we're hosting on a weekly basis here. So, of course, today it's myself and Steve with Office Hours. On Tuesdays, it's Mr. Gomez along with Andy for the Trade of the Week. And then rounding it up on Wednesday, we've got Brad and Dan doing the Q&A demo. And then we cap it all off on Thursday with Andy's Trading Studio. I ride shotgun with Andy on Thursdays, and then we leave everybody alone on Friday. So, come one, come all. Also, the trading room keeps growing in popularity and users, mainly due to the efforts of Mr. Barry Anderson, who does a wonderful job at moderating a group of 500 people on a daily basis. And the number of quality plays coming out of the room continues to grow. So if you haven't been attending, you might want to pop in. All right, Mr. Steve, here we are at the top of the agenda, and you know what that means. Are you ready to show your candlestick magic?
Candlestick magic?
Yes.
Oh, sure. Sure, why not? Pass the baton over. I got nothing to hide over here.
Let me pass the baton here. And there you have it, sir.
My unicorn Pinterest board off. Okay, so, all right. Monitor 1. You guys should be able to see just the same old big daily screen that we start off with here with the SPY. We talked a lot, and I'm sure you and Andy talked a lot last week about these two lines still being very much intact, especially this one. The last time we spoke, I believe we were above this line 1, 2, 3, 4, 5 days ago. We were back here shooting through this line. And I said, well, we really need to leave this line intact because what could happen is we could do the old, prior resistance becomes future support game. And sure enough, what do you know? Market tried to go to highs, had some quick backing and filling, some breathing, and a test below that orange line, but not a close. We've talked about this many times. We really need to look at the close of the candle. It's okay to pierce through and overshoot a little bit, but at the end of the day, we want to see where the closing prices are. True form of a market that is a bull market that wants to move higher, that dig in and create higher lows along the way. This really was a textbook pullback in all accounts. That line that was prior resistance that we broke through did its job in turning into current and future and current support. So this is our new level of support. If we continue to move higher and move out of this range, we might even have to get rid of this line and just keep moving the lines up as we go. But that's the technical takeaway of how markets and price action can work. You can get all caught up in Italian referendums and what you think Trump may or may not do to this country, but the footprints in the sand are telling us what everybody thinks. And that was a nice basing right there, exactly where it really should have been. And so I was happy to see that. Let's take a look at maybe some sentiment. I mean, the Qs, for the most part, have been in just a mess of a range. They're nowhere near the high end of their range again. So they've still got some work to do. And there's not much I'm really going to do with these lines here because these are all still very much valid lines. We've got a midpoint line here as a pivot point, and then the new highs are back up here. So no surprise to those who've been really paying attention that the QQQs, the technology laden, has not been in favor lately. What it's been in favor is the Dow. And the Dow, I mean, is not even doing what the S&P did. The Dow could have easily come back here and bounced off of this line and had resistance become future support. But no, it didn't even do that, which is a testament to the strength of the train leaving the station, not allowing for people to get in to the Dow, the industrials, which, by the way, I'll talk more tomorrow, but that was one of the reasons for CLF, Cliffs Natural Resources, which was the Trade Ideas Trade of the Week. It's all part and parcel of what's going on here in the interest of materials, metals, minings, anything you can drop on your foot. So SPY did a great job of backing and filling, perfect technical action, moving back higher, but the Dow, oh my gosh, it's just the train has left the station. It will not pull back and give people a reason to get in. So here is where our leadership still remains, guys. Believe it or not, the old Dow is back in leadership mode. It's been probably many, many, many years before people have said that. IWM also had a nice showing again today. This was a very strong chart along with the Dow and the IWM. So looking nothing like the Qs. So what we've got basically is small cap and large cap industrials kind of leading the way. The S&P, which has a lot more financials in there and other things, certainly looking healthy, but the Qs bringing up the rear. The technology laden index is just really a mess back here in no man's land. So we're not really looking at leadership in the technology space right now. The internets, the social medias, the Amazons, the semiconductors, what have you, in biotech. The leadership is in industrials, and that's where we are. So once again, happy to see that line hold as it should. The footprints in the sand are what we base our decisions on, not what we think may or may not happen in politics or in Europe or with the Fed. Yeah, they're probably going to raise rates this December, but does the market seem to care? Not at the moment. The old phrase, the December rate hike that's probably coming here, is priced in and continues to be priced in. So we'll just continue to the footprints in the sand and let them tell us where we are and what the strength of the market is. But the strength of the market is solid right now. I would hate to be a perma bear because this market still looks like it wants to go higher. Matter of fact, I've got this one guy who keeps sending me bearish crash reasons. He sends them to everybody, and I'm one of them. And I notice he's deleted them lately because I think he finally threw in the towel. You know, these bearish guys, you know, eventually they're going to be right. A clock is right, you know, twice every 24 hours. But some of these guys like Peter Schiff and Zero Hedge and everybody else who's been just panicking and screaming and bitching and moaning the whole way up, they haven't been right yet in terms of price action. They might be right in the bigger picture and the bigger scheme of things, but the price action for now continues to be extremely positive and extremely strong. All right, back to you,
Well
Mr. James.
said, sir. Well said. And then everybody remember there was this guy named Alan Greenspan back in the 90s who said blah, 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 irrational exuberance, and the market ripped for another, what, 3 years, 2 years?
He started it all. He started it all. Alan Greenspan, all the way back in the 80s. Yep.
Yeah, but, you know, the bottom line is you'll hear people ranting about all different types of opinions on what the market is going to do, but, you know,
they think it should do, and what it does is two different things sometimes.
It's the footprints in the sand. That's all we can really count on. So, yeah, really good illustration of that, Steve. So let us proceed on to the Holly recap. So the cool thing about what we saw with Holly today was it was a very manageable trade count. It was a kind of a nice distribution of trades among several different strategies, and we'll get into that. And very manageable count, and there was a little bit of extra, what I like to call alpha plus, going risk on a few trades. And of course, we've showcased this in the past, and we'll come in here and take a look at some of those trades today. All right, so here we have the Holly panel. And of course, let's kind of reflect back on last week. I think it was Friday, Steve, right, where she showed up with maybe, can't remember if it was Thursday or Friday now, but 3 or 4 strategies in the hopper.
One was short and 3 longs.
Yeah. And everybody's like, well, that's certainly a change. And of course, after all the numbers were tabulated over the weekend, we see, a little bit more full of a strategy window today. We had a grand total of 9 strategies in there today. 3 shorts, 6 longs. We can sort by anything we want to see here. So we have the 3 shorts down here. The only short strategy that fired today was the bond short. He kicked out 3 and tested the waters. After everything was said and done, though, only 3 cents was generated on those 3 trades, with Holly obeying all of her rules on the risk-off profit. But having said that, the interesting thing here today is between all of the strategies firing, even though these guys produced very little, still technically on the green side. So interesting to see on a day like today, even the short strategies didn't lose a whole lot of money today. So we had a grand total of 10 longs and 3 shorts for a total of 13 trades today. And usually, when we're looking at the all trades blotter that we have right here, and we sort by the risk on column, we will see something like this that we can use as an example for a trade around. And this was really the only example today of what we call a trade around, because we can see that Holly took the initial signal right here at a price of 29.69 cents. So it's just for easy reference here. Draw a little line across here. So we can see Holly says, okay, I'm going to give me a piece of this one long here. And of course, as soon as she gets in, we get this downward movement here. Now, keeping in mind that the stop loss was this line here, never really technically got stopped out. So if you look over here, why did Holly get out on the exit reason? Well, she exercised her right to get out prematurely based on the reduced risk functionality, which is a function of time. The longer she's in the trade, the more volatile the stock gets. She has the right to go ahead and expedite either the risk in the form of a stop loss or in the profit save mode. But this one was reduced risk, so she gets out for a 2-cent loser. So whether Holly is getting out early on a reduced risk or whether she gets stopped out, we should always react the same way when we see that from Holly. So I see Holly stop out at 2 cents here, and then set a price alert for the second occurrence of the signal. And just to refresh everybody's memory, and for those of you who are new, who might be seeing this for the first time, the statistical models that end up being the strategy that Holly generates every day, we can see what their expectations are coming into the session. And this statistical probability is good for the day, right? So sometimes we have a trade that immediately goes our way. It's never in the red. That's always nice. But just because we get into the red a little bit here, not even getting to a stop out, a lot of the times it's a timing issue. Sometimes these occurrences will occur 2, 3, 4 times throughout the day. Each and every time, the statistical probability remains the same. So if we get into the habit, especially on some of these first entries that Holly makes and she gets into the red or she gets stopped out, we just get into the habit of setting a price alert with our limit price alerts by right-clicking on the chart, setting that price alert. So when it goes through there for the second time, all of a sudden you're going to get a notification on your price alerts, and you're going to be given the opportunity to take part in that second excursion. Sometimes it's the first time, sometimes it's the second or the third time. So that was the only example of a trade around today where Holly takes a 2-cent loss, could have played the second entry, had exit opportunity up here, and we can see this one did it a couple of more times throughout the day for some smaller moves. So when we talk about a trade around, that's what we're talking about. Now let's talk about going risk on. And there were a couple of very good examples of that today. So first at the top of the heap here, wake up call. So first and foremost, when we see this signal, not quite an hour into the open, about 50 minutes in, as we can see from the blue arrow here, let me just go ahead and draw our little line here. So Holly calls the long right here. So once again, from a human perspective, Holly's giving us statistically inclined entries. So we look at wake up call. We're like, okay, we can see it's not even at the top of the heap here as far as the win percentage, but still, 56.4% of the time, typically things are going to go our way here based on the 40-day back test. Now, we can see here today, this little guy underperformed. 25%, only got 1 out of 4. And of course, we can always resort by the strategy name, and we can quickly see all of the things that wake up call produced today. But from a human perspective and a chart reading perspective, that's what we always like to drive home here, is that Holly's strong point are statistically weighted entries, and most people are not even bringing statistical probability into their trading plan. So we're starting from a very warm pool by getting statistically weighted entries from Holly. Now when we see this transpiring in real time, this little consolidation period right here, which we see this a lot in a lot of these plays that Holly produces. And, a nice little run up, which a lot of things did this on the open this morning. This one not so steep, and it kind of flattens out. Buyer takes a break, buyers and sellers are equal for a period of time, and then Holly comes up with a buy here. So we get into it. We're just getting a little sideways action, keeping in mind that our stop loss is way down here. Never really even gets flirted with. But let's kind of backtrack here. The reason we built this functionality into Holly is because the main reason is we don't want her letting a winner turn into a loser. You just won't make it in the trading biz if you do that. So as you might imagine, coding is not a very simple endeavor, especially when you're putting something like this together. So if we're seeing this, and if you've been watching Holly for a while and you've been listening to this theory, then we know that Holly is just exercising her caution and she's getting out. It's nowhere near the stop loss. And from a human perspective, we've just got this nice sideways action here. Nothing scary is going on. It's just taking a little breather. So we can exercise the option to stay in the trade. We know Holly's getting out. We acknowledge that. We also acknowledge the fact that Holly's real strong suit is her entries, so that if we can take these entries and feel comfortable with them, use our chart reading skills to exit the trade, it's a very symbiotic relationship when you approach it like that. So, okay, Holly's getting out. We know she's a little jittery. We get sideways action, and then boom, a nice little steady uptrend here. And what you'll start to notice, whether it's this pattern that I'm about to illustrate or a pattern that you like to trade, but this one would be a simple range break. The previous high was right here, and then we go range bound. We're already in it from here. Maybe we're in a couple of hundred. Okay, I'll go into 200 with Holly initially. Nice sideways action, creeping into slight profitability, and then bingo, range break, which is also a very good time to add shares to a position if you like the pattern. So if you're in 200 here, range break occurs. Okay, it was statistically weighted. Still good. It's working. Add another 200 here, and then off to the races again. And the nice thing about these little patterns is once you identify, if you're fortunate enough to identify the buyer early, well, then it does open the door for second and third entries. Now, how would we know if that might be a good play? What are the expectations, by the way? Let's say we did scale into 400 and we're getting this nice move and we're nice and green, nice little profit building up there. Okay, you're up. What are you going to do? Well, the only way we would even kind of have an idea to know what to do I get out here? Do I take my money? I'd sure hate to sell it here and it runs up another 50 cents. That's happened to me before. What do I do? Well, the easiest, most simple methodology is to look to the left on the daily. Zoom out a little bit here. So we've scaled in. We're getting this nice little pop here. I mean, how much more could this thing move? We're at 1350. Well, depending on what type of chart reader you are,
Can I add to some?
I'd love for you to jump in right here, buddy.
Yeah, go back to the 5 minute, and this is what we were talking about earlier. Now, if you're in this thing and it's moving up and then it's starting to pull back there around the number 5 area, look at that last line. What was that last line signifying? It was signifying a breakout of that channel. Where did the price pull back to and dig in and pivot and use that same level as a new baseline? So it's fractal. Price action moving through resistance and then pulling back and then turning that resistance into support happens on every different time frame. So if I was watching that particular one, I would not want to see it dip below exactly where it did. It came right back to where it should technically and then moved higher. So I just want to point that out, that it happens on the daily charts, it happens on the intraday charts. Resistance, pivot points, levels that are once resistance can become current support. They can be tested on any different time frame. It's just a price level.
Right, and when you know what to look for, and the only way you get to this level is by sitting here and repeating and rinsing and repeating. Now, if you're just focusing on this pattern alone, it'd be a very uphill battle. But when you have an AI producing statistically weighted plays for you, and then you're trading these patterns, ladies and gentlemen, it's a whole different ball game. All right, it's like you're going fly fishing in Colorado, and you go to a river. Looks pretty, water's flowing. Too bad there's no fish in it. It's not going to be a very good fishing trip, is it? Right? Well, we know that there's going to be fish in this river, right? All we have to do is pay attention and practice. Because with statistical probability coupled with patterns, as Steve likes to say when we're looking at these daily setups, if you can find the ones with the high short floats, even better, because when that thing goes, it's like throwing kerosene on top.
Oh, and do we have a couple of them ready for you coming up?
See, this is the same thing. I can find many other patterns that looked like this one did today, but they did not end up doing what this one did. They might have went snap, flop back down to the range, maybe get out, maybe jerk you down to your stop loss, and then the bottom line is they looked the same. But when you get under there and you start dissecting them, they're not made of the same stuff, okay? So if you can fold statistical probability into favorable charts, well then, you've got, every good trade could work based on one of these things that I'm talking about. The chart, statistical probability. But what if you have, what if you're in this as well, and then when it comes over here and breaks again, you're like, I wonder what the volume is in home today. What's the relative volume? Is it way above normal? Oh, I also notice it might be doing exceptional volume on the 1, 5, and 10 minute time frames. I've just noticed this as well. So now I've folded a third positive thing into this equation. So a chart could work on its own merits. A trade could work on its own statistical merits. Or if we can sprinkle some high volume on top, even better. Then, You can keep tacking additional things on here, but when you're dealing with statistical probability and a favorable chart pattern that's very simple, you see, that's the beauty. The beauty is in the simplicity. And people try to overcomplicate things all the time. That's what we humans do. Trading, other aspects of life. So keeping it simple and looking at high quality data, those two things right there can really tilt the odds in your favor when you're showing up to, do statistical and data warfare. That's what we engage in here. If anybody tells you any different, they're kind of living in a dream world.
Yeah, as we get to some of the charts we're going to mark up today, it goes exactly with what Jamie was just saying. On their own accounts, decent charts, but when you start to look at the metrics that we're going to point out that's bubbling underneath those, it helps to the confidence and helps give you a little bit of extra staying power and confidence.
Yes. Okay. So home, beautiful example. You could have made, you could have made your day just trading this one stock today. However, there were a couple of more, not quite as severe as home, but there was a little bit of money left on the table on this ALK trade. Steve and I were both talking about how this was just such a pretty little setup here based on this bouncer's strategy, and just looking at Steve, you kind of encapsulated this perfect.
Yeah, leave that right there. Okay, so that red wick and the red candle is today. The green candle and the green wick is Friday. What this particular bouncer strategy does, which was created by our outhouse genius Michael Noss up in Canada, is basically something as simple as breaking down the prior day's lows and then fighting back through those lows. So if anybody's trying to short stocks, which isn't working lately, and they do the old school way of waiting for it to break yesterday's lows and then short in the hole, as they call it, that trade never really seems to work. And for right now, that trade is just bouncing people out left and right. And that's why we're calling it bouncers, because basically it's fighting itself back through yesterday's lows and then using a very low end range in yesterday's candle range to trigger a new high. So what we're getting is a very early warning system of a possible bounce candidate, which in a sense, in my view, is just kind of a failed short selling strategy because, the price was taken below yesterday's lows, had zero follow through, zero stops were run, fought right back through that low of yesterday and really had nowhere else to go but just kind of slowly bounce back up. That's the theme behind the bouncer strategy.
Right, when you look at this nice little entry bar here, low had been clearly defined here, Of course, Holly, even a little bit more conservative than that, was using a stop loss right here. But as you can see, it was one of those trades where it just immediately caught some traction and, went, as we say, north for the day.
Yes, and I will be happy for everybody listening. I've got a copy of the bouncers here, and I just copied and configured it. So if you want a cloud link of it, just make your way to the GoToMeeting toolbar there and click on the Chat Plus button to expand the chat window. And the code that's in there right now, I will paste. This is called bouncers. And so that's essentially, it's the same base strategy that Holly uses. Now, my bouncers today had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 actual triggers. However, Holly took the base strategy, added another layer of 7 or 8, 10 filters, who knows. But the only thing that came out of bouncers today in Holly's world was the ALK trade, unless I'm missing something. So just the strategy that I just dropped in here basically triggered 10 decent bounces today, but the AI takes it to the next level, and the AI only used the one trigger of the ALK strategy. So if you have this alert running and you also have Holly, occasionally you'll see the same strategies coming from the same base strategy. It's just we never really know which one is going to be accepted and triggered based on all of the overnight rejiggering and refiltering that Holly does to take the base strategy to the next level.
Yep, and even though we see the same strategies show up on a daily basis, they're not the same. Like, if float on shows up tomorrow, the base code is the same, but the strategy in and of itself is different. Because
today's float on might be a little different than tomorrow's float on, is what you're saying.
Right, and that's the beauty of the system. What was impossible, what was just theory, 10 years ago. Hey, wouldn't it be cool if we could make a system that does this? It does all the heavy lifting for us. Well, 10 years later, here it is, right? So, the beautiful thing about Trade Ideas, especially for you premium subscribers, number one, you get the limit alerts that we're about to talk about, which, by the way, from last Monday, we're up about 4.65 points with some crazy action from 2 different stocks, and we're about to get into that. But that is the beauty of the AI system, is that the amount of heavy lifting from a numerical standpoint and the number crunching standpoint that's being done behind the scenes every night is monumental, to say the least. That's the beauty. When we first delivered to our users the back tester, well, we could just show them, look, we just back tested 3,000 trades in a 1-minute period. Now you can learn exponentially because you can operate that machinery for us, so we don't have to do the back testing anymore. Now, granted, we do because we have to feed the machine that is Holly. We have to give her data sets to work with. But then she takes over. Once we find the good data set, and she just refines it every night. And if it's good, it makes the cut. If it's not, it doesn't. Here is we
Just stay on top of strategies. We as humans are really slow at realizing that something has stopped working for many reasons. Emotions is probably at the top of the list. What Holly is doing is it's showing us every single day that the hot hand is no longer becoming a hot hand. Like I said, for many reasons. We might be biased as humans or emotional or whatever. But the unemotional AI knows when exactly to say, hey, this hot hand is no longer hot. You got to go back and sit in the bucket for a while until you start testing better. And so one of the cool things about the AI always that I realized is that the AI is going to be the first of everything out there to recognize when something is not working as well as it used to, and it's going to keep it off the shelf and keep it off of our eyesight from seeing it.
Exactly, and if everybody kind of looks down here, we probably are not going to have time for this. We're probably just going to have to spend some time next Monday on it. But for those of you who have been keeping the little SPY 50 version of turbo brakes up and running, I mean, if you saw it today, it spit out a nice little handful of winners, and it's a high-quality information stream. So no matter what type of pattern that you like, you might be finding something good out of it, whether it's the range breaks or pullbacks or whatever. It's just been producing some things that have had some very nice moves. And so that list of stocks is probably about 2 weeks old now. Well, a lot has transpired in the market in the past 10 trading days. So probably not going to have time for it today, but it'll make for good content next Monday about, okay, that process that I'll show you guys how to do, that's exactly what Holly's doing. However, she's doing it thousands of times per night, multiple times per strategy, tweaking those results, seeing if they made a difference, was it good or bad. So the bottom line is this technology is one of a kind because it's delivering things to us that would be impossible to deliver without something of this nature being in existence, right? And then if you follow the methodology that we go over with these webinars and how to trade around, how to go risk off if it looks conducive, then, between Holly and maybe a couple of other quality windows that are your favorites, you've greatly simplified your trading routine. And you've done it by not just picking things at random or things that other people say works, but from hardcore statistical proof. on a daily basis.
You have two people who were asking if there was the ability to get your SPY 50 link, if you're able to.
Sure. I will drop it in. Let me make sure it's on real time here. There's also a list associated with this. I can also just drop that list into the chat. All you'll have to do is just highlight them and copy them and dump them into your custom list functionality.
We're going to be dropping some other stuff in there. How about, well, didn't you have them email you last time to get the 50 list symbols? Which is easier for you? You tell me.
Well, it's easier to drop them in here.
All right, because we're going to drop in some cloud links later for our price alerts.
We'll drop in the cloud links, and then I'll drop the list in at the very end.
At the very end, okay. Then people can copy and paste really easily.
Exactly. That way everybody has it. For holiday, there's plenty of cookies to be had. You know, absolutely as well. So now, my window seems to be hiding, so let me find it real quick here. I guess I'll just respond it. All right. So here we can see all of the price alerts from last Monday. We can see the creation date. So here we have all the ones created from last Monday, the 28th, and how they looked up until the close today. So we've got one big mover in here, which was the Bluebird, and we can see the daily pattern that was emerging. And when we actually got filled on it, we had drawn the line, made that excursion. Another day of just kind of ho-hum, and then nice gap the following day, and then some really nice action.
A day early.
That one, Steve.
Yeah, we were a day early.
Now, Bluebird up 7.29 points. Not a bad little trade. Now, if we look at the other end of the spectrum real quick here, AKAM popped out, but then threw a little wiggle. But this is an excellent one to talk about how to handle your risk, which you should know going into the trade, right? So, depending on your risk tolerance, we can see that this was our day where it made the excursion, you know, in the money a little bit, and the following day, the same type of action, and then whoosh. Well, to ascertain your risk here, I mean, we have to look to these wicks here for the first little area of support. That happens to nicely kind of coincide with the tops of these other guys. Mm-hmm. So, you know, from a more conservative standpoint, Steve, I mean, pretty good risk identify area with this would be this line, right?
Yeah.
And there was plenty of time to react to it because on this day we had an open of 66.48.
Traded right down through it.
Yeah, 66.48, so plenty of time to react as this level was being breached. You know, would have been a little over $1 risk for that for that stop loss there. But you know, anytime you're thinking about playing these plays, you know, depending on how big the stock likes to move around, we still have to just use the areas of that we can try to deduce as support and resistance. So big winner was the Bluebird. The loser, even though it's showing 282, that's if you would have held it and not exercised any risk management whatsoever. So, you know, if you shave about $1.50 off that, you know, looking at about 6 points of potential alpha there. Next in line on the winner side was good old Chef's Warehouse. And we can see that nice little penetration there, and then it is a nice movement on up. And if we're trying to figure out, well, how much more steam does Chef have in it? Draw a couple of lines like so, going all the way back to the top of this body and its wick. And then, of course, if we do get that pop above these areas, we've got a nice little, well, we'll still be bumping our heads about right there, Steve, wouldn't you say?
Yes, I would say that.
Yeah. But in any case, if you do get to this level right here, still a pretty nice little move on a percentage basis for a $14 stock. So, all in all, this one never triggered. So we had 1, 2, 3, 4, 5, close to 6 points of potential alpha on 5 triggers. Not too shabby, in my opinion. All right, out with the old, in with the new.
Yeah, let's see if we can do that again.
Mm-hmm. Rinse and repeat. All righty here. So first on the list, let's just get my trend change over here so people can see what I'm referencing when we're talking about these short floats here. All right, so why don't we just take a look at our friend here, where'd V go? VHC?
And then again, guys, this is staying in the theme with what is working. We're not taking what's working and then saying, let's try something else. Let's go for shorts today and see if we can make money in shorts. No, shorts are not working. What's working is a runaway market, and that's spooking a lot of stocks, a lot of shareholders that are short. There's a lot of short squeezes that have been working. That's still the flavor of the day. So we're going to really, break down maybe a couple of components here, the trigger level and why we like that trigger level, and then the data of the short squeeze or the short float in relation to the size of the short float. So again, like Jamie was saying earlier, some charts look nice, but when you happen to know a little bit more about a certain chart, knowing that if the price gets above this particular level, it's probably going to send off alarm bells to a certain sector of short sellers who are going to have to decide, do they want to stick around and continue to lose money, or do they want to stop the bleeding and get out, which of course, if you don't realize, creates a buying storm. The shorts are buying, the longs are buying, everybody's buying and competing to buy, and that's what we call a short squeeze. So let's see if we can identify a few of these here and make these work.
Right on. So here's the first one, VHC, right above that level right there, right, Steve? 3051. Maybe, let's see, oops. Yeah, the high of that wick right there is 50, so we're going to leave it at 51.
Yeah, and let me just call out here. This one has a nice short float of 30% VHC, but 47 million in the float's rather medium-sized, so.
Right. Okay, and then of course we've got, we'll save Jack for last. We'll go ahead and mark up WAC here.
Okay, whack.
Yeah.
WAC, as we look at the trend line there, you just see Jamie's screen so I can see what you guys are seeing. Yes, a very long bowl-shaped, I'm glad he's zoomed out like that to give you the bigger picture. This is a very long bowl-shaped saucer bottom moving higher, and so we start to get a couple of peaks here because the price is moving away from the lows. We're making higher lows and higher highs. At some point, the shorts are going to get spooked, and so in WAC, we've got a little bit more interesting metrics going on here. We've got 31% short, but only 18 million shares. So really anything under 20 million shares is considered a smallish type float. Anything under 10 million shares is a really small float. But when you combine a high float percentage on not that many shares in circulation, these are the kind of setups that can really move quickly, and price can move very quickly because there's so much rocket fuel behind it in the form of an emotion coming from the shorts called, oh my God, I'm losing. I want out now, get me out at all cost. And then, of course, you're competing with the longs who want to take a long and try and twist the knife a little bit. But those are the metrics we're looking at, and it seems to be a very decent pivot point that we just set up there and marked that one up.
Do we want to use the high of today, Steve?
I've got it at 655, which is the high of today. So we could go a penny above, sure.
All right, we'll just say 656. And we've got that nice 31.6% short float. This is our trend change setup. All right, we got that working. CVI, I believe, is the next one on the list.
Okay.
We can see the boom out here.
Yeah, oh, another juicy one. And I say it's juicy because the float is only 16 million shares.
Mm-hmm.
And the short percentage of those shares is all the way up to 36%.
Correct.
So, very, very long basing. It's been about 4 months of long sideways basing. We just popped out of that sideways base, popped up a little bit, and I think that high from just a couple days ago would be interesting. Now, this is one that might take a week or so. Maybe this takes 4 or 5 days to breathe and then move back to highs. Doesn't always have to happen right away, but that's a level of identifying the shorts do not want to lose. So the high of that is what, 1832, so we'll go 1833, I suppose.
Right. And 36% on the short float.
And again, so what you want to do is write up those metrics on your notes. So when the trade price alerts go off, you're like, oh yeah, that's right, I remember this one. And this one has a very small float and a big high percentage. Let's keep an eye on this one. Otherwise, it's just another chart.
Yep. All right, and TCS is the next one.
Right, TCS, again, another decent float size of only 16 million shares, 22% of them are short, but as you can see there, that consolidated sideways action is really interesting. And it kind of corresponds to that sideways action back in July and August as well. So what I have working right now is just basically 615. If we can break above 615 out of that 2-week sideways chop fest, which is great because if you'll notice, it didn't give back much in price. It just gave back some in time. So consolidating over time, going sideways versus consolidating backwards in price and going backwards is a very much stronger of the two. So I love the way it's setting up there under that level. And then, of course, we love the metrics of the shorts and the very low float for a possible little bit of extra turbocharge there.
All right, and last but not least, we've got Jax.
Jack has the biggest short float of all so far. If you look at that chart, it's kind of like a little mini cup and handle after its big gap down. But there's that wick in the middle, kind of corresponds to that wick from a couple days ago. We've been going sideways for 3 or 4 days. I think if we can get back above 726, I'd call 726 the actual alert. This thing has under 20 million shares, got 19 million shares in the float, and 44% of them are short. So those are good metrics to know when the price alerts go off, and it kind of gives us a little extra confidence, a little extra fuel on a chart that maybe we might not be as interested in. But this is the kind of stuff that's been working week after week on these trend change lubricants. At some point, the shorts got to realize the market's been moving higher, and if they're not careful, some of these stocks that are basing and making nice saucer, rounded bottom saucers and higher lows and little cup and handles, trying to move up to these pivot points. If we can just identify these pivot points, we're serving ourselves real trades in real time. We don't have to chase our tail looking for the next trade. We've got 5 of them here that we just locked and loaded, and we don't know when they're going to be served up, but chances are they're going to be decent, and I'm going to want to look at every single one when they do trigger.
Okay, so before I drop these alerts into the chat via Cloud Link, I'm going to reinsert this 550 so everybody can tell what the link is. So, okay. So there's this 550 link. We can see out to the right. It says 550. Now I'm going to drop the price alerts.
So
Okay.
those of you that have the functional subscription, for the premium subscription, all you do is just treat this like a normal Cloud link, copy the link, load from Cloud, and it's going to drop all of these, all of these working alerts, I should say, before they've been triggered. They'll be working alerts, and they're basically all going to trigger for us all at the same time. Nobody gets a lead.
Yep, and now you should see a list show up of those symbols for those of you that wanted the for those of you that wanted the list.
Good observation there, Dave W. on Jack. It's one of those pilot program stocks. It's a nickel spreader. You can see the nickel spreads there on the 15-minute chart. Not a deal killer, but it's just one of those unique stocks that's trading in nickels.
Hey, real quick, I see Jeff's comment, only one alert. It only has TCS? Okay, well, thank you for the feedback. Let's try again. I could have accidentally...
You probably only highlighted the one there.
Yeah,
That's what you did.
Yeah. Hold on, I'm trying to delete them now. Okay.
Yeah,
Here are 5 selected price alerts. All right. All right, ladies and gentlemen, we'll try this one more time.
You call it version 2 so people know which one to go after.
Okay, all right. Okay, V2, coming your way. All right.
Question from Julie, does Trade Ideas work on Apple computers? It does, but it will need some sort of a parallel, Dreamweaver or some sort of partition to be able to run the Windows program and partition your disk to do that. It's up to you, but there is a way to do that. If you need more help, you can ask info@trade-ideas.com. A lot of people do actually run Trade Ideas using the Parallels or the Dreamweaver or the virtual machine type of partition to make that work. All right, looks like that worked. You're getting good feedback now.
Okay, perfect. All right, well, that wraps up the content for today, everybody. Want to thank everybody for popping in. Always a pleasure. If you're listening out there, Mr. Scott, probably a good time to tell everybody about the special discount code you have for those who have not decided to take the plunge yet.
Oh, wow, I can unmute myself. Amazing. Okay. Thanks for the prezo. We have a code for this month for the office hours thing. It's you're going to see it on your screen momentarily. It's Trade Smart, and it's all caps, one word. And that gives you a big 15% off your first month or year of premium and 10% off your first month or year of standard, whichever way you decide to go. So both TI Premium and TI Standard are fantastic. The primary difference that makes premium the primary difference that makes premium better is access to the artificial intelligence investment discovery engine, Holly, as well as other advanced features like our backtesting module, the odds maker, and price alerts, which are shareable, and other advanced windows like our RBI, GBI windows, that kind of good stuff. But both standard and premium, including just the $99 a month standard base level, include a full hour of one-on-one training, the Hour of Power. And as soon as you become a subscriber, you should go and look at our support section, click on the training, and select a time that works for you with Andy, Jamie, or Steve. And they'll get you up and running on Trade Ideas with the best possible start. So tradeIdeas.com/price and use the code TradeSmart. I can also use that code to upgrade if you are on the monthly standard plan to either of the premium plans. If you're planning on upgrading to premium from standard annual, just email us at info@tradeIdeas.com and our support will help you out. I've put a handout with this helpful information in your handouts panel on your GoToWebinar interface. If you just go ahead and click on the little plus next to where it says handouts on your GoToWebinar panel, you can download that. And that handout also includes some handy contact info. So you can email us info@trade-ideas.com. If you have any questions about anything, that's the best place to send them. But you can reach out to Steve directly, steve@trade-ideas.com, or Jamie, he's jhodge@trade-ideas.com. We have a phone number that's really useful if you have a billing or subscription issue that you need addressed that day. But again, info@trade-ideas.com is the best place to send technical questions because that gets routed to the most knowledgeable team member about your question. And you can follow Steve Gomez at Today Trader on Twitter, or you can follow Jamie Hodge, he's QuantBot, or Dan Merkin is Trade Ideas 1. And Facebook, Trade Ideas Pro on Facebook.com. We post some different content there sometimes. And if you go there today and look at our stream, you can see a whole bunch of photos and stuff from our event we had yesterday to help out women investors in getting going in the markets. There's also a YouTube video. If you go to our YouTube channel, you can locate that there. It's the entire stream, though, but I put in some helpful bookmarks about how to get around the pre-stream and the breaks and all that stuff. So thank you for attending, and the recording will be up a little later on tonight, or at least by tomorrow morning for sure. And thanks, Steve and Jamie.
All right.
Thanks, everybody.
See you tomorrow.
Steve, we'll see you in the trenches, buddy.
Yep. Take it easy.
Thanks,
All
all.
right, bye-bye.